All right. Welcome. Um, we're going to look at some stuff we have today on MacroLab, primarily on the macroeconomics perspective. So it's very important. We look at what is happening in the macro for the week. So this week covers 18th to 12th May, right? So that is what this outlook covers. And we're primarily looking at the regime, the primary driver, and the key risk. Like I always say, there are three things that we look at in terms of building um, our outlook for each week. We want to know what is the regime. We also want to know um, what is the primary driver and what is the probability of that primary driver not to hold, which is the key risk. So um, we look at regime, we also look at the key risk, we look at the primary driver. So these three musketeers help us to know how to, anticipate, for the week, looking at the macro drivers is very important. So let's look at what has happened. Okay, this document comes with a little bit of upgrade because we now have a weekly regime alignment from our monthly perspective. Okay, so this gives us a view of where we are coming from the monthly down to now we're in the weekly. Okay, so it's more or less a top-down analysis on the macro economics perspective of the USD markets, coupled with Euro USD and Pound USD. So if you look at if we look at some things, you will see that we have the monthly regime. Okay, the monthly regime said late cycle USD stabilization. So what we are looking at is transition activating faster than expected. All right, so the weekly alignments we are seeing now is toward higher for longer, meaning that we're seeing the Fed holding rates for a longer period of time than expected. Okay, so which somewhat aligns with the monthly regime. Okay. Now, so okay, what next we have is a market pricing. So, what is the market currently pricing? The market is pricing delayed cuts and hike tail risk. What it means, the market is looking at Fed is not going to cut rate at the moment, um, and possible rate hike. So the rate hike is still a tail risk. So it's possible that Fed is going to look towards hiking of rates, okay, of interest rates. So if that becomes a narrative in the market, then we'll see how the market will react, to it. All right. So this is the implication is USD under owned for this regime. So USD is going to price higher, it's going to go up all of the way, all of that. So must happen this week. So what we're looking at this week is yield sustained upside. Okay. We're looking at yield sustaining upside, where then the implication is failure. Okay, failure is 1 week shock, not regime um, shift. All right. So this is just more like telling us where are we from the monthly to the weekly to what the market is doing and what must happen this week and all of that. So we are in a regime where the market is pricing a higher for longer hold for Fed, which is more or less hawkish for the USD market, and is going to is pricing the yield higher. At the moment, I think the yield is about 4.0%, 2-year yield. So it tells us that market is expecting a rate hike from Federal, Reserve, and that is key for whatever thing we are doing for this week. Okay. So let's clear all drawing. Let's clear all drawing and see what next. So let's look at, remember, like I said, our regime is higher for longer repricing regime. So this is the regime is more like directional bias. Okay. For some of us who are layman in macro, regime simply means the current directional bias. Okay. So what is it? If somebody tells you, ask you what's the correctional bias in the market, you probably do your technical analysis, you'll say, oh, it's a buy, it's a sell. In macro perspective, we use the regime to itemize the current directional bias. So that is how we build narrative. Okay. So the primary driver is what is that thing that will activate that bias for us. So let me come from technical perspective. You know, if you're doing technical, so if you get to this demand, it will sell. If you get to this support, it should buy. You know, stuff like that. Okay, so the primary driver is more like a macro perspective is that if this event happen or if this sustains, then it should continue towards our regime. Then the key risk tells us that the key risk is more like invalidation zone. Exactly. The key risk is more like invalidation zone. So if the market breaks out from this point, it changes from buy to sell. If it breaks out from this point, it brings from sell to buy. Just just to put it in perspective of what it is in terms of technical outlook. So I hope that makes sense. I just don't know how that idea came. It's a very fantastic way of explaining this thing. Now, we also have event calendar that can, anticipate the regime that can help, build the regime for us. Okay, one of them is this week. The primary event that we'll have this week is centered on Wednesday. Why? Because the UK is going to expect their the inflation report, which is very key at this moment because one of the primary drivers for the week is inflation data. So this Wednesday, the market is going to anticipate inflation report from ONS, and we're going to see what is happening in the UK zone. Then, of course, same Wednesday, we're going to get our FOMC minute. So the FOMC minute is primarily centered on what are the Fed seeing in terms of inflation. Do they see elevated inflation? Do they see inflation as a major risk in the market at the moment? So if that is the case, then the markets will keep pricing a higher for longer regime and a possible rate hike. All right, so let's look at some of our focus points, our focus point is a very important aspect of this report. So if you're going to look at the outlook, you want to see the focus points. The focus point tells you what is the market doing, what is driving it, what are the scenarios like, and all of that. So the focus point one is saying the regime shift plus Fed hike narrative. This is the current narrative, okay? So what the market believed before, the market believed that, let me get a pen, all right? The market believed that inflation was temporal and oil-driven only. Fed patience would dominate, wage softness capped tightening risk, Euro USD could continue higher. This is what the market believed before, that, oh, this is what should happen, and this is what we believed. But somewhat, the data changed last week, right? Inflation broadening beyond energy into core goods. We saw that last week, the core inflation, hedged a whole higher, all right? And that changed to what the market was believing before. The PPI was extremely strong, right? Then higher for longer is becoming entrenched. Then the high tail risk is rising again, which supports USD structural support to rebuild. So meaning that supports USD to buy, higher. So this is what the market, so this is the current regime we are in at the moment. And currently no data is going to change it at the moment. No data is going to change it at the moment, all right? So the focus point two, you can see the focus point two, Fed hike narrative is rising. This is our focus point two we're using to build our regime.
So now the third part is higher for longer hold, and the probability is highest. We're seeing this happening. The confirmed base case keep first rate elevated through 2026 minimum. So if the higher for longer narrative stays and we start hearing that Fed is going to hike rates, then it's going to be a case that we're going to start looking at towards the 2026 market regime, especially from Q3 to Q4. It's very, very important. So we have the delayed cuts into 2027. Then it's rising really. Okay, market is now pricing a longer hold duration than 3 weeks ago. Okay, additional hike tail risk is also rising, no longer dismissed. FOMC minutes will tell us if the FOMC members sees inflation as a risk, going forward in making decision in their monetary policy. And this will be very key in building our outlook, going forward. So that is that on our macro, perspective in terms of this. So let's see the yield. The yield is very key. Okay, the yield is very key to this. Okay, let's look at the yield, which is our focus point 3. The yield is an important indicator in terms of building or and expecting what the markets will do, on a shorter time, especially for the 2-year yield. Especially for the 2-year yield. So if you look at what we have, FOMC minutes on Wednesday will be a good time to see what the yield is going to do. So the 2-year yield above 4%, hawkish confirmed. Then we'll see Euro USD continue to be bearish. If the market stays around 3.8 to 4.0, the 2-year yield, then the market Euro USD will be mild bearish. Pound USD will also be mild, mild bearish as well. Okay, then if the yield stays below 3.7, which I doubt, really, then we'll have Euro USD to be bullish because we don't have anything that could push the yield to 3.7. That's a whole lot, okay, at the moment. But this is just giving us a clue of how we want to see the markets, react this week. Then we'll have our yield reaction matrix. Okay, our yield reaction matrix is hawkish FOMC minutes. We're seeing it higher, bullish, and USD bearish, pound USD bearish. Stable FOMC minutes, this will be stable, mild bullish, just neutral, and this will be mild bearish for Euro USD. Labor weakness, we'll not see that happen. Maybe for US claims, then we'll see bullish, which is a low probability for that, to really happen. Okay, so going into that, we'll say that Euro USD and Pound USD will continue being bearish for the week. All right, we'll have our scenario matrix. Our scenario matrix is primarily just for what do we see, what is our higher probability for the week. We're seeing 50% for Euro USD to continue to price lower. We're seeing Euro USD to continue to price lower, which is primarily what we want to see, this week, guys. So what is there again? Euro USD, what do we have in our pair outlook? We are seeing neutral to bearish, right? We're seeing the key rotation level. You can go mark up those things in your charts and expect the market to, see the bearish extension, all right? We'll see invalidated by blah, blah, blah. Okay, so this is just a pair outlook and what we see the market to, to do going forward. Then Pound USD is also bearish. We're expecting a bearish continuation for Pound USD, as well. Then we have our best weekly expression. Then we have our primary risk. We have our secondary risk. We also have our tail risk. Our primary risk that could change the direction of Euro US and Pound US being bearish is if we see labor to deteriorate, then we can say Fed may be a little bit less aggressive in terms of rate hike, which is not possible because USD claims cannot do that. It's not a regime defining event. Okay, so the secondary we have is oil collapse rapidly, which I do not see happening at the moment. For this week, when I don't see oil to rapidly collapse. Then our tail risk will be FOMC minute reviews less concern than market has priced. So if the FOMC on Wednesday said they don't really see inflation being a concern, then markets will tend to, reprice a higher for longer or a possible rate hike, going forward. So that is what we have on our macro outlook. That's what we have on our macro outlook this week. And let's see what the markets do for us as we go into the week. All right, I hope this presentation helps you to make an informed decision this week. No, this is not financial advice. This is just primarily for educational purpose. I would not expect you to, see this as a means to make any investment or any form of investment decision. So, guys, we will see in the technical outlook in the next video.